Hey traders, it's Danielle, and tonight I'm going to be talking about Netflix prior to earnings. Earnings is going to be reported tomorrow after the bell. It looks like about 5 o'clock Central Standard Time, which seems a little bit late. Normally it's right after the bell, but hey. Um, and I wanted to talk about this stock because it is going to be really critical as far as determining any kind of continuation in the Nasdaq. If you look at the Nasdaq right here, you're going to see that there's, you know, there's a lot going on because we are sitting right underneath these key areas of resistance. And you can see that number one, not only is there a lot of resistance via my Fibonacci levels, but there's also price resistance in the July to August high that we had last year. So, you've got resistance here, you've got resistance here. And then what we also have is when you zoom in, you can see that it's just, overall been very, very strong. We've had this rally since about the 13th of March. We are squeezing on a daily time frame. We're holding up above the 8 EMA. We have multiple squeezes setting up on lower time frames. You've got a 78 and a 195 here. Um, this index is just looking for a reason to go higher. And when you look at Netflix in particular, Netflix is going to be reporting before all the tech stocks, and Netflix also does have a 195-minute squeeze. So we've got that, just a little lower time frame squeeze. We also have the fact that Netflix has had, fantastic rally going into earnings. On the daily chart, we're holding up above the 21, above the 34, above the 50 simple. It's pretty positive technicals for Netflix. I also want to point out that on the weekly chart time frame, you have a weekly squeeze. These weekly squeezes are some of the best signals for trading a stock over a course of a couple months, because historically, what they do is they fire and they give you, several weeks of upwards pressure. And in this case, that would bring you up into about 400. So that weekly squeeze is separate from earnings, but on one hand it's separate, on the other hand it's not. What can happen is that sometimes the earnings event can be, the reason why that squeeze fires. It can just be the catalyst to, push it forward. If you look at, for example, JP Morgan, JP Morgan has a weekly squeeze. They had a really good report last week on earnings, but the squeeze hasn't fired yet. Like, that means there's still more potential upside. It did fire on the daily chart. You can see it goes from red to white to green. That green dot is firing, and that's when it's, exploding. Weekly squeeze is still there. Anyway, I'm getting off track now. The point of this entire thing is that Netflix is going to be the first of the tech stocks, okay? And it's reporting tomorrow. The Nasdaq is in a position where it could definitely keep going higher if it just has a catalyst, and Netflix can be that catalyst. Now, I'm sure a lot of people are going to say, well, people are canceling Netflix and they raise their prices and they got, there's all kinds of reasons like that. We could argue about how Netflix is not as good as it used to be, which I'm a very big Netflix user. And I will tell you that it is not as good as it used to be, but in some respects, it doesn't really matter when you're looking at this pattern. So, most of the time in my trading, I'm going to use the macro background and I'm going to say, hey, I like this company and that's why I'm going long. And it's combined with a technical pattern and an earnings pattern. In this case, I can't really say that, Netflix is amazing right here, because if you actually look at the EPS numbers, last quarter, for example, they're estimated to make 45 cents and they only made 12. But what is amazing about this stock here is that they've had some inconsistencies. Like last quarter, they were only estimated to make 45 cents. Quarter before that, they were estimated to make $2 and they made $3.10. quarter before that, they were estimated to make $2.90 and they made $3.20. So, I mean, it's possible they have a good quarter. But even more than that, what I like about this here is the pattern. So generally, when you have, a pretty consistent pattern like this, where you have consolidation, breakout, consolidation, breakout, consolidation, breakout, consolidation, breakout, consolidation, breakout, like this isn't just retail traders buying this thing. This is, big money coming in regularly buying up shares. And when the smart money, the big money, has confidence in something and they're going to be, regularly buying it like this, and even if it has what I would consider bad news and it goes up 6.7%, in some respects, it doesn't really matter if, their content wasn't that great over the last quarter or whatever the case may be. Because with this stock, it looks like, people are just kind of looking for an excuse to buy it. And so when I look at the patterns and I say, hey, it gapped up 6.7%, even though it didn't really do very well, people are looking at it and saying, oh, well, it could have been worse. Let's buy it anyway. It's just kind of one of those things. So when I get to what I could do with it, it really just comes down to the earnings patterns over the last 3 quarters. And I do think that it has a lot to do with the fact that it just got completely clobbered last year. And, Netflix at one point in time was like one of the strongest stocks, if not the strongest stock out there. And so, there's people that want it to come back. And you can see how much it's retraced. And, I'm not here to say it's going to be all the way back at 700 because I don't think it will be back at 700. I'm not betting on it being back at 700. But I think at the very minimum, we could trade it up into 400. So, and I think other people want it to be back and are buying it, which is pushing it up. So when you look at it here, you have a pretty key zone of support right around the 330 price point. So I do like that. If it breaks down below 330, that would be a bearish case, because that is a zone of support, and, breakdown into this zone would not be very positive for the stock. If you look at the market maker expected move, the market maker expected move is going to be $27. And so when you're looking at a $27 move, you're trading right now at 330. So that would bring you right up into 360, or down into 300. So sometimes what I'll do with these is I will place trades on both sides. Like, for example, you could place a butterfly down here targeting 300 and place a butterfly up here targeting 360. Obviously, one of those would lose money depending on, which way it went. With earnings, though, I will do that sometimes, especially if I can get cheap trades. And, like if I can get risking 1 to make 10 on this side and risking 1 to make 10 on this side, then, if you get one of them right, and even if you make 3 or 4, then it's fine, right? The time where that kind of strategy doesn't work is if it just trades flat. But looking at Netflix and analyzing the past 8 quarters, trading flat is not a very likely situation. You've got a 6.7% gap, 10% gap, 3.2, 29%, 21%, 2%, 0.9%. That was as close to flat as you could get, and 7.6%. So, you've definitely got some volatility with this stock. This is not, going to be a calm and collected stock here. Let me just move this a little bit. Looks like I got my level a little bit off. There we go. There we go. Okay. So in any case, what could you do with it? Well, if you like the idea of being long like me, you could simply sell some put credit spreads at the 330 price point. But let me tell you, though, that right now I'm making this video on Monday after the close. I would not select that strike unless Netflix is still trading there tomorrow. Usually what I like to do is I like to look at where the stock is trading in the last hour before market close and then select the at the money strikes. So for example, if Netflix tomorrow is trading at, 325, then instead I would sell the 325s. So that's an idea. The other idea that I have is doing an out of the money butterfly. By doing an out of the money butterfly, you can get your debit down. You can get your debit down pretty substantially. So you can see that this stock right now is trading at 332. So by placing a 340, 360, 380 butterfly, you're only spending $3. And in that instance, you can risk about $300 to make about $1,700. So pretty good on the risk reward there. Now, I don't, I very rarely get the full max profit. I'm usually just targeting something like this, double. But the reason why you do it that way is because of the risk reward. Now, you could do one on that side, and then you could also do one on the other side. If you said, hey, I don't know about the bullish case for Netflix. Let's actually just look at also the bearish case as well. In that instance, what would that look like? Well, then you could just do it again, slightly out of the money. If you did something like, could try with 330, but it's probably going to be a little bit too expensive. 330, 300, 270. Yeah, it's going to be $7. I don't like spending that much on an earnings trade because it is kind of a lotto trade. 320, 300, 280. So there you go. You have another trade for about 332. You could also, make it a little bit tighter. People say, oh, look at this. I found this butterfly and it's only going to cost me like 50 cents. You can make it a little bit tighter, but it has to be reasonable. You have to think of a butterfly like a dartboard. Okay. So if you have, a dartboard the size of a needle, when are you ever going to hit it? So you want to make sure that you have a range. So if you think that Netflix could reasonably be between 315 and 300, and spending less than $2 is a good way to make that bet. You're spending, and that's for 2 contracts, but spending less than $2 to, potentially trade Netflix to $300. I mean, it's a really good risk reward. So sometimes if I'm not sure, I'll do both sides. That is just a way to kind of, hedge your bets. Or you can just pick a side. So that is about all I have to say about Netflix. I will be following up on this on Twitter, and then I'll also be following up in the options room. So we're actually having an options open house this week. So if you go to my Twitter page, which is Trader Danielle, Danielle, you can scroll down here and you can learn all about the open house. So we're going to be having an open house with our whole options team. You can sign up for free and you can join us in the live trading room. We're going to be going over, all the earnings reports this week, trades, Nasdaq, all that kind of stuff. You can click on my link to sign up, and when you click on that, you will get more information about this, and you'll be able to come join us. So that is all I have for you today. I hope you have a great rest of your day, and I will see you in the next video.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me